this is Surya Saha, and welcome to the Insurance Story Podcast, a platform to spread knowledge on insurance innovation, digital disruptions, and entrepreneurship. Our website, insurexstory.com, and we are available on Spotify, Apple, and Google. Today, we will discuss on the topic navigating the risk of digital in insurance. And for now, I'm delighted to welcome our guest, Arun Narayanan, who is the digital strategy and transformation leader for Asia at Marsh and McLennan. So, Arun, a warm welcome to the show.
Thanks, Surya. Thanks for having me.
So Arun, why don't you tell a bit about yourself, what you do at Marsh, and your role as a digital strategy and transformation lead?
Of course. So just a bit of background about myself. Grew up in India. Have a computer science, background. That's where I did my, bachelor's in. Then moved to the UK to do my master's in information systems at Manchester Business School. I started my career in the insurance industry with Willis Towers Watson. I was, generally involved in the data and analytics, digital transformation space. I was there for about 5 years. After which I worked for, different firms, always in the risk management segment. And joined Marsh McLennan about 3 years ago, leading digital, for Marsh across Asia. And effectively, in my current role, I sort of manage all of the digital transformation efforts for Marsh across the region in Asia.
Right. Yeah. Well, quite an exciting journey. Right from Asia to Europe, again back to Asia.
Indeed.
So Arun, as we discuss on the topic on how do we navigate the risk of digital in insurance, moving on to the agenda for the day, operational, cyber, and value creation risk are some of the common three forms of digital risk we see in modern businesses, right? So assessing the digital risk landscape begins with understanding, of course, the fundamentals of these. So how do you see insurers navigating through these risk types?
Yeah, absolutely. I'll try and share my perspectives from sort of two lenses, right?
Yeah.
One from the lens of the customer, right? Ultimately, how the customers are interacting, and another from the lens of the insurance industry players, right? From a customer standpoint, and if you sort of segment customers into sort of the consumers, the sort of retail consumers, to then the SMEs, to then the large organizations, there's sort of different flavors there, right? If you look at sort of the consumer space, almost all of the services they consume, increasingly all of the interactions are through digital channels, right? And
Yeah.
that's what the organizations are focused on, whether it's web, mobile, social media. Almost a large chunk of the interactions that a consumer is having are through digital channels, right? Now, with that obviously comes digital risks, if you can call it, right, that are coming more and more to the forefront, right? Cyber is obviously a standout one. It's an emerging risk class. You can see, even with what has happened over the last 2-3 years with COVID and some of the changes, with more and more companies pushing for remote work, hybrid working environments. You can clearly start to see the kind of external threats, right? The attack points from a cyber point of view are increasing, right? And as an industry, we are yet to really fully kind of experience what a catastrophic cyber risk could really be. So we're still in that early phase, right? So cyber is definitely one that stands out. Equally, there are other digital risks. For example, on the regulatory and compliance aspects, where a lot of these services, the customer acquisition journeys start with digital and pretty much happens through digital channels. There are a number of risks that organizations need to be wary of. Are they doing the right due diligence as part of the customer acquisition journeys, right? Are there sufficient compliance check? How much of that can be automated to really kind of deal with customers at scale? So a lot of these digital risks are increasingly coming to the forefront, but it's also kind of important to note, particularly when looking at the risk landscape for large organizations, that there are still, traditional risk classes, right? Whether it's, transportation industry, or supply chain, or other kind of industries, there are still a large number of traditional, risk classes that are also kind of still very much relevant, right? So, overall, from a kind of consumer, kind of client buyer standpoint, it's interesting to see both the kind of emerging risk classes with digital kind of standing out,
Yeah,
and also the sort of existing other kind of risk classes, which are kind of increasingly interdependent, interconnected. You can see the geopolitical risks, with Ukraine war, for example. That's had a knock-on impact on availability of natural resources, or obviously the cost of living crisis, with that. So, very, very, interesting landscape that we are
yeah.
leading to.
Of course, the nature and the type of risk is also, rapidly changing, and we are increasingly witnessing the type of risk perhaps the insurers may have not experienced a decade back.
Mm.
So, of course, and the emergence of digital is actually is it's certainly going to help insurers on how they actually tackle or rather mitigate such risk.
Yeah.
And digital itself brings a lot of different types of risk, you know, be it cyber, be it with, or rather in financial services and many other industries. So,
Yeah.
yeah, please go ahead.
Just to add there, right? If you look at it from an industry perspective, if you look at what, risk management advisors or insurance brokers or insurers are doing, it's still early days, right? If you look at the focus around digital in the industry, there's basically two main use cases, right? One, they're kind of focused on distribution, right? How do I use
Yeah,
digital as a way to sell, insurance, right? And again, kind of more relevant in the kind of consumer segment as opposed to the kind of large, complex segment, right? The other aspect, of course, is, how do you give kind of more enhanced digital based client experiences,
yeah,
right, to kind of delight and retain clients. So insurance as an industry is still at that early stage, of thinking how digital can almost augment their existing service offering. Of course, in consumer, it's a bit more widespread, a bit more embedded in terms of the end-to-end journey. But the core activities of insurance, right, or risk management, there's for a large number of the classes of insurance, they're still kind of done in traditional ways, right? So, if you look at how a large deal is brought, if you look at how a large deal is underwritten, or how claims are handled, digital still hasn't really transformed those underlying core activities, right? So from
mm,
that point of view, yes, there's the emerging risk classes, which are being increasingly well understood, but the core functions that the insurance value chain performs, we are only at the start, of digital and data really trying to transform those journeys.
right. Yeah. Each of these risk landscapes are unique, right? And therefore, to navigate through this and understand what it takes to build resilience, what would be your advice to senior leaders in insurance?
So there's some interesting examples that have caught my eye recently, right? If you look at, supply chain, for example, you can see large organizations like Apple really trying to, given the learnings, especially I would imagine over the last 2 to 3 years, with their dependencies on China, or other sort of vendor, risks that they have, there really seems to be a trend to minimize those third party risks in the supply chain, value, chain they have. So that there's a lot of activity from an M&A standpoint in terms of them effectively trying to control as much of their supply chain as possible and minimize the dependencies they have on third parties, right? Now, of course, that's something that big players like Apple can do, not necessarily something that average sized products and services companies can do. So, in response to kind of build more resilience into supply chains, you can see organizations starting to really put a lot of emphasis on how they do vendor assessments, how they are starting to kind of apply stress tests on their supply chains to really see where the kind of vulnerabilities are. So that's a lot of learnings, I think, in terms of what's happened over the supply chain industry in the last kind of couple of years. Also, obviously, using the cyber example, you can see organizations really starting to focus on assessing their cyber risks, trying to understand how mature their risk management practices are around technology and cyber. Again, it's early days. As I said, we haven't probably yet had large enough sample sizes of catastrophic cyber events yet, right? So the kind of models we have in terms of modeling out cyber risks and potential losses, there's still a long way to go for some of those models to mature, but at least as a focus area for organizations, it's definitely stands out, right, in really trying to ensure that they're resilient, and they're trying to minimize cyber risks, and manage those risks as much as possible, right? You can see, even in the insurance industry, you can start to see some trends, right? So organizations are, insurers and the industry is starting to kind of start having exclusions around state backed events, right? Because that's a potentially of a scale that's unheard of, or not been experienced so far. So there's some new sort of trends around exclusions around state backed attacks. Obviously, also, most of these companies have major dependencies on large cloud providers, right? So look at Azure or AWS. So there's starting to be some exclusions around the level of coverage they might get, based off some of these large cloud providers. So there's some trends emerging for sure, and the industry is obviously trying to adapt as well. But these are a couple of examples of how leaders are really focused on kind of building in more resilience into their processes and into their kind of dependencies, right? Of course, other pieces, in terms of organizations really trying to adopt technology across their operations. Cloud being an obvious example that we have seen over the last kind of 3 to 5 years. Of course, ESG and climate risks as well kind of stand out in terms of what organizations are focused on now. So there's some very, very interesting examples of organizations really kind of focusing on that resilience aspect over the
Yeah,
last couple of
yeah,
years.
of course. So, what is the implication of digital risk in insurance, and what, according to you, will be the next 5 years outlook for the industry?
So, if you listen to experts, I mean, it seems that, we are sort of increasingly moving into a more volatile environment. If you look at, kind of the kind of large risks out there, a lot of them seem quite interdependent. Take the Ukraine war, for example, starts off as a geopolitical scenario, and then you can see the knock-on effects it's having, right, in terms of supply chain impacts, availability of natural resources, cyber threats, obviously cost of risk and inflation, as a large, as a result of the energy crisis as well, right? So you can see that the risk landscape will continue to remain complex and evolve at a greater pace than possibly that we've seen in the recent past. um, as I look ahead, I sort of try to look at it in two sort of aspects. One from a emerging risk standpoint, and another from a kind of traditional risk standpoint, right? If you look at emerging risks, for example, climate. I read the other day that if you look back over the last 10 years, 9 of those years are among the top 10 most highest recorded temperatures, average temperatures in the history of statistics, right? So you can see that climate is a real kind of focus area and something that needs to be addressed as a
Yeah,
priority. And I'm kind of curious to see how technology can really kind of help with that, right? For example, one example is the electric vehicles, right? EVs. So how much of an impact will EVs really have over the next 5 years?
Yeah.
As sort of one area. So that's something I'm looking forward to. If you look at the cyber landscape, again, I'm looking forward to how AI, in general, is going to impact kind of cyber risk mitigation, over the next, kind of few years. I think AI, is an area we'll see kind of potentially exponential growth over the next 5 years. And it could potentially have kind of introduce new risks, of course, but it in my opinion, it'll also kind of help mitigate a lot of the risks that we are starting to see from a cyber standpoint. So that's on the emerging risk. If you look at the kind of traditional risk classes, if you look at the industries like transportation or real estate, you can see that across the industries there's more technology adoption, right? Everybody is looking at how we can introduce technology across their operational processes. So one of the things that means is the creation of more data, more structured data. So I'm really kind of looking forward to how more data, more structured data will really start to influence how insurance, for example, is underwritten. How risks are underwritten, how claims are handled. If we had more accurate and real-time data flowing through from the clients and their businesses through the insurance value chain, how much of an impact would it have in terms of how some of these core insurance and risk management activities are handled, right? So
Right.
if you ultimately, I'm looking forward to sort of risk management getting even more embedded as part of the kind of day-to-day operations of any organization. So I think that's technology and data, real-time data will have a large role to play in that. So I think these are some of the areas that fascinate me, and I'm really kind of looking forward to how these trends will evolve over the next sort of 5 years or so. And I hope that insurance as an industry can really kind of play a leading role
Yeah.
in driving that change across
No,
industries.
absolutely. And it's also will be interesting to see how most of our leaders and CEOs are actually looking at the type of risk and the type of technology, in order to uh, not just modernize their business, but rather to mitigate any evolving risk that we might not have come across.
Exactly, yeah. And we saw that with COVID, right? In
Yeah,
terms, the adoption of cloud and various other kind of you know communication technologies as well. You can see that technology ultimately helps provide more resilience, provide more scalability, especially when you have sort of unexpected events. So
absolutely.
I think a big role to play.
Yeah, I think the foundation really lies uh, with the skills, that is through awareness of underlying nature of the digital risk and how it can really evolve.
Yeah, absolutely. And you can see organizations really starting to take efforts to upskill their employee base, right? And, in terms of how, to kind of get more competent with technology and also kind of be more conscious
Yeah,
of, some of the risks, especially with social media and other kind of platforms, right? Ultimately, some of these platforms, a company might be using a platform at a very large scale, but they don't own these platforms. So again, you got to be conscious of the risks involved in relying in your kind of business process, relying on some of these platforms. So yeah, more learning definitely across the board.
yeah, yeah. Well, thank you, Arun. It was a fantastic discussion, and thank you for sharing your thoughts today. A true delight to have you as our guest.
Thank you for having me. Thanks.
And lastly, to wrap this up, thank you for listening and see you at our next episode. Take care and stay safe. Goodbye for now.